Good day, everyone, and welcome back to First Bank's Wealth Management Market Commentary video series. My name is Todd, Executive Vice President and Managing Director of First Bank's Wealth Management Group. As I record this video, the U.S. stock market is up 17% year to date. In addition, since the current bull market began in March of 2009, the stock market has risen 357%. This bull market is the second longest in history at 8.5 years. The longest bull market in this country lasted 12.5 years and occurred from 1987 through 2000. So, not surprisingly, clients constantly ask us, will this bull market continue? And if so, for how long? So I thought I'd take this opportunity to address this topic. But first, let's get this out right now. If anyone ever tells you that they can predict the next stock market crash or bear market, run away as fast as you can. It's never a good idea to invest with fortune tellers or crystal ball gazers. I'm not in the business of predicting things. However, what I can tell you is this: bull markets don't die from old age. Bull markets die because they get murdered. Here's my take on 4 general ways to murder this bull market in today's economic environment. Number 1, overvaluation. We saw this happen during the tech boom in 1999 when tech forward PE multiples approached 50 and the S&P overall approached 25. Well, today, the forward PE multiple for tech is at 18.6 and the PE multiple for the S&P 500 is at 18. Today's PE multiples coupled with low core inflation suggest that this market is a long way away from being overvalued. Now, I'm not saying that this market is cheap. In fact, we believe that the market is fully valued at these levels, but we are a long way away from being overvalued. Number 2, an overly hawkish Fed. Yes, the Fed is tightening, i.e. raising rates. We had 2 Fed rate increases last year and 2 rate increases this year, with the strong probability that we will get one more 25 basis point increase in December. But with the 10-year Treasury bond at around 2.4%, it is measurably below its 4.4% 25-year rate average or its 6.5% 50-year average. Even if the Fed continues to raise rates into 2018 and 2019, we are nowhere near high interest rates wounding the current equity market rally. Number 3, euphoria by investors. The current environment is nothing like the environment we experienced in late 1990. Remember those days when everyone and their brother owned stocks? We all knew someone who had quit their day job to become a day trader. You could not go to a cocktail party without someone talking about how much money they made in the market. This is not that kind of stock market. In fact, half of the U.S. population does not even own stocks. Retail fund flows have been negative all year, meaning retail investors have been taking money out of the U.S. equity markets. U.S. investors are sitting on $50 trillion in cash. Cash, as a percentage of GDP, is the highest it's been since the 1980s. There is absolutely no sign of euphoria out there by investors. The last thing that can murder this bull market is some sort of geopolitical issue. I'm talking about North Korea, a massive cyber attack, a catastrophic earthquake. There is no way to predict these types of events, so therefore, we suggest clients don't factor geopolitical issues into their investment decisions. Of course, our world will experience a future devastating event. But using history as a guide, the equity markets will eventually recover and continue its upward trajectory. For example, let's look at 9/11, one of the most defining moments in U.S. history. Following the attack, the U.S. stock market closed and remained that way for a week. Once the markets reopened, the S&P 500 lost 11.6% in 4 trading days. The good news was that the panic selling was short-lived, and all major U.S. indices recovered to pre-9/11 levels within a month. So, where does all of this leave us with respect to our question around continuation of this bull market? Can it continue to run? I believe that it can. I'm not making a call on how much higher it can go, but I believe that it can continue. And if it can continue, then for how long? Remember, I'm not a prognosticator. Predicting markets is impossible to do because you have to be right about predicting when to get out and you have to be right about predicting when to get back in. I will say this, there will be pullbacks, corrections, and yes, bear markets. There always have and there always will. But I believe in capitalism, entrepreneurship, our educational system, our great companies, and their ability to innovate. I also believe in the millennials and their future ability to take us to the next level. Therefore, I firmly believe that our investing best days are still ahead. Thanks for watching, and if you have questions, comments, or ideas for future topics, please email me at gene.todd@fbol.com. See you next time.